To our global CTKS family, we're grateful that you're here. All of us together make this one of the best communities on YouTube. Here, we use the world's leading indicator of price, the CTKS method, to give us X-ray vision across stocks, cryptos, forex, commodities, and yields. So we can see what the top 1% in financial markets see before the move happens. That's a license to print money and a way to stay safe. Whilst others are panicked, we are calm. When others guess, we stack probabilities. We don't fall for hype or stories, we profit from reality. We know making just 3.5% per week is a 498% profit per year. We are the elite 1% in financial markets. Price moves in waves, so no matter if price is going up or down, please be kind to yourself, be kind to others, be dedicated and committed, and never blame. Instead, learn and grow into the best version of yourself. Let's see what the markets are doing today. Inside the Profiting Masterclass, in Lesson 2 of Week 1, I talk about Rule 658. I want to share that with you today. Profit by overcoming the retail mindset. This is a very important rule. Overcoming the retail mindset is incredibly important. Retail mindset simply says sell on red, buy on green. 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 You get the idea. Now, what we do is that we want to get onto the right side of the percentage. And we can see back in the tech bubble of 2000, this is MicroStrategy. It went to $333. You can imagine the tale of two investors. One investor put $100,000 in here at $330. Oh, let's make it $1,000. $1,000 at $333, and unfortunately, over the next couple of years, it decreased 99.87%. That's the tale of one investor. Let's have a look at our other investor. She buys right here and she just holds. So $1,000 at the bottom. So the first investor, $1,000 at the top, the next investor, $1,000 at the bottom, and just holds on. The percentage return here is 129,185.71%. We're just assuming this particular investor has uncanny habits of buying at the bottom and selling at the top. And what does that mean? What did that $1,000 turn into? It turned into $1.29 million, literally 1.3 mil. So when you see price coming down like this, please just be aware that these upsurges in price, especially over time, can make you an absolute fortune. And there's another way of looking at it. If you're unfortunate enough to buy near the top, if you manage to hold on through all of this turbulence, it could take you a long time to break even. Therefore, one of the best things that you could ever do is, with knowledge, buy on red. The important thing there is with knowledge, but there is a much, much simpler way. A way that removes all the hardship, all the stress. A really important rule here is Rule 271. You don't have to make big percentages to make big percentages. Now, what does this mean? Retail will look at MicroStrategy and say, I need to buy right at that bottom and hold it forever. That is one way that you could do things. Of course, that could work. But what about if we just explore a different way that takes advantage of the natural up and down movements in price? Even in a down wave, you get a lot of up and down movement. Let's have a look. If we could just make on a weekly basis, and inside the crypto market, it is doable, 3.5% per week, and just roll our money over. At the end of 52 of them, we would have 498% profit. When people say, I want a big return, I want to make a big percentage return, they're not sure how these small percentages create big percentages, but they do. It's very easy to buy and sell at the wrong time. So how do we overcome this? There's a way and a free resource that you can grab from the homepage of ctksmethod.org. It's the cheat sheet to mastering price action. You just download it absolutely free of charge. And there's some really good resources here to help you out also. The cheat sheet is comprised of 7 rows. Row 1 and row 2 measure risk on or risk off sentiment across the stock market, across the crypto market, across commodities, across the bond market, and Forex, and general risk on and risk off sentiment. It is incredibly powerful. All charts are intercorrelated and interconnected. When the markets move, row 1 and row 2 gives the reasons why. Let's have a look into row 1. Row 1 is the VIX, the DXY US dollar currency index, dollar yen, the 10-year, the 2-year, and oil. What we can see is the VIX has been coming down, and that created a bit of a surge inside the crypto market and of course the stock market as well. But we had a degree of basing. That basing took the risk on sentiment entirely out of the crypto market. We've had a bit of a decline in the VIX at the current time, and that's bringing back risk on sentiment. Something interesting, when risk off was coming in, I'm just going to focus in on this part just to help you out, so that you can see that kind of intercorrelation a little bit better. You can see the DXY, the dollar is actually moving with Bitcoin at the current time. We do get this kind of behavior from time to time, and we get it inside the yields as well, inside bull markets. Now, you would say, and you would suggest, Ken, this is anything further from a bull market, this particular price action inside crypto. But just keep your eyes on things. We've had a flush out of a lot of liquidity, and what I showed you in the early part of the video shows that on the yearly basis, the money has literally been flushed out. All the longs have been flushed. Maybe not all of the longs, but like 95% plus. Getting into row 2, and it will take you some time to understand how to read the cheat sheet. And profiting Masterclass students, please make sure that you look into week 2, which is predicting the tops and the bottoms of these charts. They're very important. What you can see inside row 2, we have junk bonds, the euro dollar, the Aussie dollar, gold, silver, and copper. What have we noticed? And the blue line across these is Bitcoin. We've noticed that the US dollar has been surging up. That's putting negative price momentum into the euro dollar, and the Aussie dollar is considering going that way. But we're actually getting junk bonds coming up. And we've also seen that the VIX has been going down. One area of concern for us, and I showed you this in the intro, was NVDA. NVDA got really hard hit, so we'll need to look at NVDA from a structural perspective. Also, we can look at gold and silver structurally. Retail doesn't know where the structural support and resistance levels are, and they think they're brick walls and not gravitational areas. So on gold, everybody who is retail would be saying around this 4150, that is definite overhead structural resistance, and unfortunately they're very wrong, because that's not where the structure is at all. We need 2 levels of standard certification to find the structural levels. And we can see it's literally at that 41.44 mark. This is where retail gets a very harsh lesson and harsh indication of how structure actually relates to price. Price is gravitational around structure. It is typically not a brick wall. And we had a big push through on gold. It found that structural overhead resistance, and the buyers got exhausted, and they've been pushing down. We're at a current structural level right here, right now, which is 41.32. The next lower level of structure is 41.24. So we definitely have to overcome the 41.44 structural resistance in gold for gold to go higher. And you can see that gold and Bitcoin are moving directionally together. Peter Schiff must be very upset. Let's turn on the structure for silver, and we can see the major structure is 51.24 and also 51.16. So what happened here? We got a push through on gold and a push through on silver. So it pushed up and back, pushed up and back. But notice the difference. We had a lot more structural support inside silver, so it bounced. It hasn't made a higher high yet, so it's actually technically not broken this particular high, so this is just a retracement. We need to see what happens around that 51.20 mark. If it comes down like this, lower structural levels are opened up in that case. Now, what would the lower structural levels be? There is one here. It's probably pretty hard for you to see, but it's at 50.63, but it still is significant. And if we go down a little bit more, just a little bit above the $50 level, would be the area that we would look at. If we find support here, we're looking at structural targets to higher levels, and the first real structural overhead resistance in silver is 51.73. Now, you can do this with any specific price chart. It doesn't matter what it is. Structure is read the same across every single price chart. Looking into the major market indexes, which is row 3, which is the S&P 500, the NASDAQ, the Dow Jones Industrial Average, and the Russell 2000. Look at Russell. Russell went absolutely nuts. Now, this is all very positive for the crypto market. We've had a breakout here on the S&P 500 and also the NASDAQ, also the Dow, and also the Russell. The Russell is super strong. So far, the momentum is very positive. All these templates are available from the Profiting Masterclass. So when we look at the S&P 500 futures, the NASDAQ futures, the Dow futures, and the Russell futures, they're all looking actually quite good. So we would anticipate and also expect upward price momentum inside the crypto market, provided these keep on going in the right direction, which is up. Looking into row 4, which are the individual components: Apple, Tesla, NVDA, Microsoft, and Strategy. I'm just going to pull that back a little bit because we know NVIDIA did a swan dive down. Now, what we're seeing inside the markets at the current time is that Bitcoin is primarily leading the way from a risk-on or risk-off sentiment indicator. Now, what does this mean and how do you use it? If Bitcoin is coming down, expect the stock market to be coming down as well. You can see that absolutely occurred here. Now, if Bitcoin is going up, expect risk-on sentiment inside the markets as well. Now, you can see that Apple is a little bit pear-shaped with its behavior. Sorry, that was a really bad pun. But we can see that Microsoft and NVIDIA are all following that directionality of Bitcoin. Now, that's really helpful to us because Bitcoin is a 24/7/365 asset class, and it doesn't suffer settlement periods of like T1, T+1, T+2. You get your money back immediately. Now, what's happening to Strategy? Well, it's just mirroring, literally, Bitcoin's actions. And there's been a lot of different news stories coming out about JP Morgan trying to take Strategy out of the market. Please let me know in the comments, what do you think about JP Morgan currently, and what do you think about Strategy? Elite Service members, when you pop on your monthly indicator here on NVIDIA, you could see that 182 was a very significant level of structure, and we got a structural failure because the market pulled us down right across everything. And why did that happen? Because the VIX spiked up. Now you can see this red dotted line. That's the target level for NVIDIA from this month's service. We hit it. Seeing such a big drop in NVIDIA is largely to do with its structure. For example, this month, the big drop inside Bitcoin was because of Bitcoin structure and also total crypto market cap. What we see right here at the 168 is a really rock solid level of structural support. The thing that we do to become an institution of one, we must embrace buying on red and selling on green with structural awareness. Structural awareness is so vitally important, and this particular negative target for this month was decided and designed around structure. Let's have a look into row 5, which is total crypto market cap. Looking into row 5, which is total crypto market cap, Bitcoin and Ethereum. We can see with total crypto market cap just above that $2.94 trillion mark, there is structure inside the market. Across around the 3 trillion, there's fairly light structure. It becomes heavier around that 3.04. Yesterday, the markets were coming up and we're saying this overhead structure is a little bit strong, but hopefully it will make its way through it. When you look inside the week 2 course of the Profiting Masterclass, it will save your account if you're actively trading. So please make sure that you revisit that. Also, what we can see literally at price now, 87,300, we have a structural level. Provided we hold above total crypto market cap and we hold above this 87,300 level, things are looking pretty good. It can come down a bit. It could literally come down to around 86,650, which would be this structural level on total crypto market cap. In the Profiting Masterclass, I tell you how you can, and I show you how you can read between charts. Very, very important stuff. Because, for example, if you were inside Ethereum, say ETH was your money chart, you would know because total crypto market cap has structure around that 2.94 and we've got 87,300. So we know that total crypto market cap is around, the support is around here. In terms of ETH, it's around there. Now, where is that as a price? It's around 28.93 as a price. So here, total crypto market cap flicks in to support the entire market, including ETH. So you need to read the structure of whatever your money chart is. If you're doing ETH, you need to read that structure in conjunction with total crypto market cap and also in conjunction with Bitcoin like this. It's a very, very powerful system. And the system is very straightforward too. If we're getting above, we structurally target higher levels, and if we're falling below, we structurally target lower levels. It is literally that simple. Looking into row 6, which is Litecoin, Bitcoin Cash, Binance Coin, and Ethereum Classic, we can see that we're getting some positive upsurges in price. Now that doesn't surprise us at all because we've seen the major market indexes, we've looked at the futures. The only problem we have is the euro and the Aussie dollar. We don't want them to decline too much because that could put negative price momentum across the crypto market. It's very important how all markets are intercorrelated. They work together as one. So we can see for Binance Coin, Binance has overhead structural resistance around that 863. The next level structural support is around that 849 and then lower at the 842.54 mark. When you mark up your charts with level 1 and level 2 standard certification, you know exactly where the algorithms will come in to support price and where the algorithms will push price down. Now having a look at row 7, which is Cardano, Solana, Dogecoin and XRP. What we can see with ADA, it came into the overhead structural resistance around that 4,300 mark, and of course Total and Bitcoin also pulled back, and ADA did a triangle on that move. If you just always bear in mind that price is negatively biased and you can layer in at lower structural levels, you're going to do really, really well. Now, when we look at Solana, we can see Solana has literally massive support around that 133. Now, look at the difference. When we look at the pairing back, you can see the triangle in ADA. Did Solana do a triangle? No. Why? Because it hit structure. Where did the base of the triangle actually occur? At structure. Now you understand triangles much better. Triangle bases are structural. Looking at Dogecoin, we saw that the triangle was tried to go to this structural base, but instead it went to this structural base. Understanding where your structure is wildly important. And look at Doge. Who let the dog out? Doge is going for it. At the time of this recording, Doge was 152.80. Now, when we look at XRP, XRP has got a lot of sellers entering around, let's get an exact number here, entering around that 227. So just be aware, these levels up here, lots and lots of sellers. But XRP is a very, very powerful crypto. There's no question about it. And look at all of this over exaggerated levels of structural support just playing in here around that 209.74 level. Fantastic. So what we can see is XRP could sort of just go like this. It could consolidate. Now, if the markets are pushing up this way and we get follow through, we would anticipate and expect that XRP could just land back in this 225 to 230 zone. There is likely to be some consolidation around there because that is really strong structure. That's the other little tidbit that you might like to know. Triangles are structurally formed on the base. You can see it here playing out in real time. It is just sensational stuff to know where the triangle can actually base itself. And also, when you've got a lot of structure like this, they are consolidation areas as well. So when you have a lot of overhead structure, it's likely the price can come up, it could shoot through it and then decay back into it and wobble. It always depends on the intercorrelation and interconnection between charts. If Bitcoin is just putting in a very strong green candle, XRP will break through that area. But remember, when you have weak structure, you can get this. When you have stronger structure, you can get this. And the difference to your account can be quite substantial. Getting a pullback, for example, if you were in Solana, getting a pullback to that 129, you would prefer a pullback to around 133. That is what structure gives you. The understanding. So this, as you can see, is the world's only forward-leading indicator of price. Structure is always read to the right of the last candle of price, like this. That's how we read it. We see where the price candle is, we look at the underpinning structural support and overhead structural resistance. If you found a new knowledge gem or learnt something new, please share it in the comments. We are a community of abundance, not scarcity. If you're new, we would love for you to become part of our global family. All you need to do is smash like, subscribe, press the notification bell, and comment on what time it is now. Doing this shows that you are committed to forging a better life for yourself and the ones that you love. With financial literacy, you can become recession-proof. Trading and investing are lifelong professions. Tourists visit during bull markets only to get wiped out, but professionals stay no matter the market conditions because they know that making just 3% per week is a 365% return per year. We are the elite 1% in financial markets. You will create security and financial freedom in direct proportion to your willingness to learn and grow, and never blame. If you commit, your world will improve immediately. If you're going through a life pullback, our love and healing thoughts are with you. The sun will come out again. There is always hope. Be kind to yourself, be kind to others. Show gratitude and happiness, and you'll already feel richer today, and today is all we ever really have. Kate and I very much look forward to joining you again in the next video.